Hello everyone, welcome to Dmvii Live for December 16th, 2017. Keep in mind, stocks and strategies discussed here are for information only. Do not treat any information provided here as investment advice or recommendation. It is up to the individual investor to perform due diligence prior to investing in any company. And here are the symbols covered this week.
Energy play and very volatile. This is a 3-month chart. Wow. But, wow.
Yeah, I would not buy that one right now.
But, historically, obviously, in a 5-year chart, it's in a downtrend with the energy plays. But,
Now, Vince, are these all, as I like to call them, Vince charts? So it's all sectors?
And what I did was I looked at brokerage recommendations and analyst recommendations of the last week, the ones that I respect. And I just went through a whole bunch of charts and picked out the charts that
They're your kind of
That
chart,
I-
is what
that
I'm
I
saying.
kinda like.
They're driven by your thought process,
Yeah.
analyst positivity, but the Vince, as we call in this room affectionately,
Yeah,
Vince
and-
chart.
Yeah.
not only the analyst positive, I look at the projected earnings and past earnings and so on, and I gotta be positive on it too.
but this is not necessarily a business chart because it's too high. It hasn't dropped back for you. You just said Freeport Macmoran.
Yeah, I would not buy this one,
Yeah. The train has passed the station.
yeah.
All right, form is the next one. F4M. Let's see. So,
The 3-month chart usually looks best for these things.
yeah. I kind of like to look at the 1 year to see what the general trend has been, and it has an uptrend, so we're looking about a good stock.
Yeah, I like an uptrend, but it's a dip within the uptrend
Yeah.
and it's starting to come back up.
Yeah. But,
The trouble with buying a stock that is in a steep downtrend is, yeah, it may be a good value and it may gonna turn around, but it might take a long time to do it. And so you're sitting there with your money tied up, it's dead money.
Vince, why don't you call me this on Thursday? Went up 11% Friday. God. And there's a gap there. Look at that gap over there. Wow.
That's how you know.
It's a real uptrend. Wow. All right, next. H-O-P-E. Oh, Bancorp. Wow. 2.9. These have gone up.
Okay, that's HOPE. Wow.
So far, all of them have had a great Friday.
What all of these have in common is that you've got an uptrend and then there's been a dip within the uptrend and it's coming up out of the dip. And the stock has been going up steady for several months. I'm not interested in it because it's probably getting too close to topping out.
When I look at the overall chart, Vince, I look, the high, historic high seems to be around here at 21 bucks. So you're picking up at 18 and $3 more dollars and hit the high historic. The next one is OMAM.
And this is all based on just the performance of the last week.
So from Fidelity, huh? Okay. Wow, this is up and coming. 3 months. And again,
AM, okay. I've seen it.
separated by tax plan use, I guess. Dmvii is Pfizer. It's a pharmaceutical, right? With juicy 3.4% dividend, which Gary loves. Yeah, Pfizer is interesting. Pfizer's more of a defensive stock, right? Yeah. RRD?
Yeah, I wasn't trying to be an analyst for these things. I was just
Sure.
looking at what I like when I see a chart.
I mean, everybody's got their own way of thinking, so. that's
But all
what
of
I-
these have increasing earnings, and all of these are very, very well liked by certain analysts that I have respect for.
Doesn't
So
have
it's a
any earnings
mixture
to,
of, it's a mixture of fundamentals and how it's performing.
What does this company do, you know? Okay, also, anybody, this request is got by the company's, because if you look at a 5-year chart, you know, it really took a dive in, in 2016, September.
We cut the dividend.
Yeah.
But then it's kind of struggling to get it back up. So this might be an opportunity.
Hey,
Hi, Bull, how are you?
wow,
Bo is here.
yeah.
Got a haircut from last time. TTVK.
Everybody's glad to see you, Bo. I mean, you can't help
Thank
yourself.
you.
Yeah, there's a question mark on this one. I can't make it out. TPH. 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 Well. 5 point. Is that why it's 5 point group? Again, 2.24. Oh.
Vince, how did you screen these? Through
Fidelity
a site
again.
or just, did
What?
you screen these or filter these first and then look at the charts? Like, how did you come up with the companies?
Fidelity recommended, right? You said.
No, what I did was I made a list of stocks that have been doing well these last 5 days. That's where I started. Okay. Then I looked at charts, then I looked at fundamentals, and then I crossed out the ones where I didn't think the fundamentals were that good. There are times that charts will shoot up because of rumors or things that are not very important. And I think you gotta have the fundamentals on your side, and you've gotta have favorable action on the chart, both.
And how many total stocks did you look at to get down to the 10?
God, I don't know, maybe 50. The whole thing went real fast.
So this is a home builder, right? You know, where you know, well, it's a 5 year, and then okay. Next one is just have about 3-4 more TMI. Too much information. Here's a nice dip there, a buying opportunity. And yeah, so I don't know for sure. Again, wow. So this is more of a momentum play, like the IBD versus Business Daily. They're looking at momentum. Pick it up. WAFD, Washington Federal. This is bank, a bank. This is a bank. Okay, plateau there. And
One thing I did notice that in doing this little exercise, that the financials are starting to move.
oh yeah.
And the government people are saying there's likely to be a interest rate increase soon.
Yeah.
And so that explains why your financials.
Well, they already raised the
Yeah,
interest rate.
they raised it
They already
earlier
did it.
Tuesday.
Oh, they did?
Yeah,
Yeah,
but
but
they
they
announced,
also
I think, 3 or 4 more.
3 more.
They anticipate, yeah.
2018.
When did they do it, this week?
Yeah, Wednesday.
Wednesday.
Oh, okay.
I also think it's the taxes will really be cut for financial.
Right.
This tax bill goes through, presuming it goes through. I think people are beginning to price that in, thinking it will happen.
So Washington Fed is another one, and Bank United, yeah, another one. Yeah, if you look at the XLF, which is the ETF for financials. You know, but yeah, financials and all, so, but that's about it for the, so we buy all these stocks, so we'll be in good shape, huh? 6 months from
This is just an
now.
exercise.
Right.
It's just, that's what we wanna know, is what you think, Vince, that's. All right, Don, I guess you're next.
Well, I guess I didn't guess low enough for my Golf India Mike, so I got it. I'm down a penny.
Global income fund. Global income fund, a dividend of 4.82%.
Yeah, well, I don't believe that, frankly. That's okay.
Well, what do you think the dividend is?
I think it's 6.
Okay.
Then there were 4 stocks I saw. These I haven't investigated them yet, but they look like if you're a dividend guy, you might want to look at them anyway.
But Mr. Brown, before you go on to that, do you think this will hold its own with the respective couple 3 interest rates?
Yeah, this is global income fund.
Okay.
I think it'll still.
Because Europe and Japan will still keep rates down.
Okay, Tango Golf Lima Sierra.
Yes.
That's military lingo for all you people have heard down before. What's your thinking on
Healthy
that?
dividend.
And we have Bravo Delta.
Bravo. Banco Bradesco, Sociedad Anónima. Must be Spanish, no?
Yeah.
3.76, but I think it's higher.
That doesn't look right. Maybe it is right. India Victor Romeo.
What was the first letter?
India.
Oh, India. Oh, yeah.
And read it. Mike Tango Golf Echo.
Mortgage. Let's see, so, wow, 10%? Are you kidding me? Isn't that a red flag, Mr. Brown? No, huh? You over there. Live on the wild side.
That's right.
Ah.
That's it for me.
Don?
Sir.
REITs.
Can I-
Go ahead, John.
That kind of return. So that's not unusual for a REIT.
And the question is what they'll do next year with the director trajectory.
Well, let's say that since they have to pay out 90% of their income, you know, if they're anyways efficient, they're gonna have at least 10% income.
You're okay with that? You'd hold this through next year?
I am not familiar with this company, but in terms of REITs, the interest rate's consistent. Or
REITs have
dividend
been-
rate, I'm sorry.
REITs have been the strongest performer for the last 20 years. And the best sector of any sector.
Don, Chris Wada mentioned today, because of the bill coming through, he liked C and he liked Bank America.
Yeah.
Are there any other banks that
Goldman
you're
Sachs.
other than these few you mentioned here that you think will, you know, they might be high right now, but they'll even go higher because of the bill, that you would recommend just researching bank-wise?
No, I think banks are too high now for me.
Okay.
I'm not going into them. Not unless, I may go back into Sona Bank. For some reason it hit a new low. I've got to watch it.
SONA.
SONA, right. It hit a new low. I don't understand. I've got to dig into that one too because
Well, it's done well since you recommended it.
no, I really, I have a lot of faith in people who run it.
Yeah, no, I mean, I didn't realize it hit a new low. I know they did their dividend recently. I saw that, but since you recommended it, it's been fantastic. So, but, okay. That was,
I know people talk about Goldman Sachs, right? That's undervalued.
GS.
Yeah, but well-known name obviously, but as opposed to maybe JPM and JP Morgan.
The next gentleman over there in the pink shirt?
I'm just observing right. I'm not sure how things work. I was invited by Andrew.
Okay. I know we've got, over you then.
Yeah, so the only thing that I've done kind of recently is there was a company I brought up a couple months ago called Tencent, and I've since bought more of it. That's kind of the only thing I've bought in a while. And then there's another company that's on my radar, but I haven't bought it yet. I'll give you the ticker when we're done with this.
I'm glad you mentioned Tencent, because what's the China narrative right now? If you look at the Chinese stock market, it's been flat or down. I had an experience with Alibaba recently, and it kind of came down a little more than I liked.
Yeah.
So what do you think about that? Because Tencent is going to take over the world, actually. Right?
It makes me
Facebook in China.
Be a
Right?
10-cent world.
This company makes me nervous in a lot of ways. You know, their market cap was bigger than Facebook's like 3 weeks ago, and then there was a sell-off, and now it's kind of bottomed, and that's why I bought more when it bottomed out. But I feel like every day I'm reading that they have bought 5% of this, or 10. You know, they own 5% of Tesla, 10% of Snapchat. They own a lot of private companies, so you don't know what the value of those are. They own this company called Ola, which is the Uber of India.
Right.
So, but you know nothing about it because it's a private company, and you know, almost everything that I read that they're investing in is mostly private, which is dangerous because you don't know, you know, how it can pan out. They also own about 5% of Activision, which is a big gaming company, and that's really what Tencent does, the gaming company. So
Aren't they also have Netflix kind of business as well? Streaming.
They have. I don't think they have anything streaming quite yet, but there is a Chinese company that just anecdotally, it is a streaming company called YY, and about 6 months ago it came on my radar. Their stock was at $60, and I didn't buy it because I thought that Netflix was going to make a pretty big push in Asia. The stock's at $120 now, so I'm kind of kicking myself for that. But you know, I'm a little nervous about which direction Tencent could go because I do feel there's part of me that agrees with that sentiment, like this company can take over the planet, and then there's also part of me that thinks it can go to zero pretty quickly because China is very unpredictable. So, I don't know. I mean, yeah.
They actually do have some financial data on Morningstar.
Oh yeah. I mean, I've looked at. I didn't buy it without looking at their filings.
Because just by looking at this, if they're actually spending a lot of money on acquisition, that will explain why the gross margin is actually decreasing for at least the 12 trillion month even last year.
Yeah.
But then overall, the book value is increasing every single year.
Their earnings.
It looks solid.
In their year-over-year earnings, and their last earnings came out 3 weeks ago, it was a 70% increase year-over-year. I mean, that's ridiculous.
Yeah, I actually know Tencent since I was like maybe 10 or 9. They've been around for a long time.
Yeah,
I remember I used to use their
Did you use
instant
WeChat?
messengers.
The WeChat?
Yeah, WeChat. Yeah.
See, that's apparently the big money maker for them. It's bigger than Facebook Messenger. People don't even realize it.
The whole Chinese community uses that.
There's 1 billion people every month use it, they say. So I mean, I like Tencent, but I just think there's a lot of inherent risks that come with it being a Chinese company. And then the other company that I haven't bought yet, but I'm probably going to buy is, the ticker is BEAT, Biotelemetry.
Really?
I like this company. From what I've read, I need to take a deeper dive into their filings, but from the press releases that I've read over the last few weeks, there's a couple of reasons why I like it. They just signed a partnership with Apple, and their technology is going to be integrated into the iWatch, which I think could be a decent moneymaker for them. And they've also are on a list of what I was reading, like small cap stocks that are expected to outperform in 2018. So if you're looking to maybe just hold it for like a year or so and make it a nice little gain, according to some Wall Street analysts, this could be a decent buy.
Are they in the medical field at all?
So
because it says bio.
Yeah.
They do remote like cardiovascular monitoring. So it is like a telehealth company. And I work for a telemedicine company, but we're still private, and I'm fully okay with saying this about my own company. We're owned by a private equity firm, and they've completely overvalued us. And it's because they're using companies like this and Teladoc as their benchmark. So, Teladoc more so, they're a very big telemedicine company that's overvalued. I actually think this could be undervalued, and it could be, a nice buy right around this price point going into 2018. I think the telemedicine field as a whole is largely untapped. There's only a few public companies that are doing it, and then there's a number of private companies like mine and my private company. We're the biggest.
Could you explain to a layman what this is? What
telemedicine
your company does and this company does?
Sure. So what my company does is we're owned by Warburg Pincus, which is a huge private equity firm up in New York, and we basically, the easiest way to describe it is we have these carts that we sell to, they're like these big apparatuses with computers attached to them, and we sell them to rural hospitals that don't have access to specialists like neurologists and psychiatrists. And what they do is they outsource anybody that is having a stroke or showing, people that need psychiatric help, people that are saying, I'm going to kill myself, they need specialist help. They outsource that to us, and we have doctors all over the country that log in and conduct consults over the computer. So the theory is it actually saves them money because they don't have to pay for hiring specialists like a neurologist or psychiatrist who could demand big money if they're working at a rural hospital and they're the only person that's working and conducting all the consults for them. And also we can, since it's basically over the computer as opposed to in person, the other part of the theory is that we're getting people in and out of their emergency room quicker, which means their what's called throughput increases and they get to see more patients, which increases revenue for the hospital. So it's actually a pretty interesting business. I just think it's sort of, personally, I just don't think it's totally taken off yet, for multiple reasons. It's kind of a lawsuit waiting to happen, God forbid, if something goes wrong over, conducting a consult over the computer and it shuts off, and someone who's having a stroke ends up dying. That's what, we do face pushback from some hospitals that say, what if that happens? Teladoc is in what's called the pre-acute space, which is not, specialist care. That's like, I woke up with a rash, should I touch it? You know what I mean? That's kind of the stuff that they're working on. So it's not life or death, and that's why their business, I think, has taken off, in an exponential way. They went public when they were 77 million revenue, and they went public at $1 billion. So that's about a 14 times revenue multiple, which is insane. They're doing, I think, 150 million in revenue a quarter now. So they're pretty big company. I think biotelemetry is a much smaller version of them. And they did buy somebody in the last 15 months or so, which I think is also why the stock kind of got beaten down, because with the whole, they didn't integrate the company that they bought probably very quickly. So I don't know. It's interesting. I don't know if it's like going to be some kind of exponential money maker, but I think it will go up over the next year or so.
What's the name of your company?
Specialists on Call, and we acquired a company last year, and we're probably going to acquire another one this year. So we're about 50 million in revenue.
Are you gonna acquire Beats?
No.
Inside information here.
No, we're not.
So they're located
In
Pennsylvania.
Conshohocken,
Okay, right there.
Philadelphia. Yeah,
Yeah.
that's actually that's like where
So
my
they're local, not
parents live.
Chinese or.
No, they're local. But yeah, I do think that there are investors that are interested in this kind of technology because there aren't a whole lot of companies doing it. But I also do think that it is taking a long time for it to take off, and I understand why. Whereas our investors want us to be the next Teladoc, and that just doesn't happen overnight. I think Teladoc was private for like 14, 15 years before it went public. So.
What is your symbol?
Well, my company's private.
Private.
What does Teladoc look like?
Their ticker's TDOC. They've been kind of all over the place. They went public at 20-something bucks, went as high as mid-30s, then bottomed out at $9, and now they're back up to 36.
Why such a big move on Friday? Wow. What's going on?
Okay, is that it for you?
Yeah.
Next gentleman there?
All right, one of the stocks I'm looking at to add for next year is AVGO, Broadcom, and they're really making last year or two, their net income has really gone way up. AVGO, I believe.
AVGO. Oh, Broadcom. Right.
Yeah, I'm looking at this. I mean, it's just been I think over the last couple of years, I think it's up like 700%. I think it's going to continue to rise. Their ROE is pretty high, and like I said, they're making more money than ever.
Yeah, that's good.
Are you looking for a pullback?
Well, we'll see. I mean, but I'm probably going to get into it at some point. I just don't know when.
Speaking of pullback here with the
Yeah,
tech
they
coming
did have a
down,
little pullback.
but that's not enough. It's
Right.
enough.
I'm looking to add that at some point. Another company I'm looking at adding over at some point in financial stock is last year I bought T. Rowe Price, TROW, and I think it's up quite a bit since I bought it. I think I bought it around $70 a share, and I think it's over $100 a share. But I'm thinking about maybe potentially adding Schwab. It's a similar type company, and their ROE has been rising over the last several years. So I don't know what their ticker is.
SCHX.
Yeah, it's
SCHW actually.
Yep. So I'm looking at this as well as another financial play. I know it's gone up recently, but if with the tax reform and with the raising interest rates and another play, these companies are making more money than ever. Market's good. I don't know what happens when the market goes down to a company like this. Probably takes a bigger, deeper dive.
T. Rowe Price, in my opinion, is the best of all the mutual fund companies. I've dealt with them, and I've dealt with a lot of others, and they are the steadiest and most reliable and least risky, I think. That's my opinion.
So, and I know Noel mentioned it last week, but another company along these lines that I would look at adding, but I mean, I believe it was, you mentioned it, BlackRock last week. Is it BlackRock, right? So I'm also looking at that.
What was it? The B.
BLK, I think.
BLK, yeah, and that thing is gone way up this year.
But those are load funds.
Right.
T. Rowe prices are non-load.
You understand what he's saying by that?
ETFs.
No. What did
He's saying this is loaded,
But you see, they're
where the
mostly
other's not loaded. That's
BlackRock
why.
is mostly an ETF, so they're not.
Because that impacts you buying the stock. It's only if you're buying their funds.
Right.
But as far as playing the financial sector, I might play it this way next year. I mean, I already own some of the banking stocks, so. I haven't made up my mind yet, but those are two or three I would look at. That's all I have.
All right, Rick, you're next.
This is a new departure for me.
Uh-oh.
I like to think this old dog can occasionally find a new bone.
Okay.
I bought ARKW, an actively managed ETF. It's Alpha Romeo Kilo Whiskey. It is mostly a large cap high-tech fund, but their largest holding at 10% is, are you ready for this? The Bitcoin Investment Trust.
All right.
I'm the first one today to mention Bitcoin.
You're Bitcoin.
And the last,
Um,
I hope.
No,
I don't know about that.
what was that?
And the last, he hoped.
I actually cannot find out much about Bitcoin Investment Trust except that they hold Bitcoins now.
Here's the top 10 holdings, by the way. Amazon, 6.4%. Bitcoin Trust.
Okay, Fidelity says Bitcoin is the top holding.
Yeah, about right.
Well, they're
Like
staying
10%.
anonymous, so you don't know.
I suspect, I don't know anything about the Bitcoin Trust, I would expect it's probably at a premium to its underlying holdings, because people can't get this.
Well, anyway, I'm not about to buy Bitcoin for myself, but this being an actively managed fund, presumably the managers have some idea what they're doing.
Right.
I don't know whether Bitcoin Trust buys and sells or they just own it. Anyway, other holdings are Amazon, Athena Health, Twitter, Tesla, something called 2U, which I never heard of.
They're here. They're headquartered in Maryland, like Bethesda.
Oh, you like them?
I don't own it, but they've doubled this year. I think they went public maybe like 2 years ago, and they've been on a tear since.
What
IPO.
do they do?
It's an online education software company.
Also Netflix and Nvidia, which I know some of you are keen on. Alphabet, Facebook. All right, so this is very high-tech stuff. It's a gunslinger fund. It's probably not a permanent holding for me, but right now it's working. It's up 83% this year.
The main thing is you want to know what you think. Now, who knows, true or false, who's good or not?
Okay,
That's what we want to
Morningstar gives it a 5-star rating. The expense ratio is 0.75%. It's a small part of my book, so I thought I'd give it a shot.
Yeah, there you go.
All right, that's all for me.
That's it. Dan, you're next.
Not very good.
All quiet. All right, well, the next, I forgot your name again.
My name is Sandy. I'm here first time. I met him in the.
That's why you forgot her name.
That's
My
right.
memory's going bad. My memory's going bad. I'm just kidding.
Oh, me too. My memories fade away these days. I'm individual. I'm researching myself. I just after retired, you got boring, so I did that. But I don't know. I would like to ask you, you guys are long-term investor or short-term investor? That's
We're a mixed bag here. Very mixed bag.
or you're gonna short sale person or
No, I don't think
Everybody's
does short
different.
sales.
and also do you consider also mutual funds? Are you more deal with that?
Vince is comfortable with mutual funds.
Yes. So
Did you have any in mind in particular?
today I didn't. I'm probably all among what I heard from you. I'm the one probably go the totally opposite direction to me, because actually most of financial professional and you guys much more expert than me, I guess. But it's normally used to be studied by the trends and PE ratio and going through that. But before I speak, may I ask you how long you've been here and who made $1 million here after that? Would you succeed?
I think that I can confirm that we've been around for over 40 years.
Wow.
And,
It's been long. So,
because time has passed me
so
by, and I'm the
you
oldest.
old guys and billionaire, and I'm here just a little chicken here.
I think Don
40
is
years
only
means.
number two here. Don, you've probably been coming for 15 years or something.
Wow.
Since 92.
Long
92.
time.
All right, well, that's getting
Wow.
that's 25 years.
So to me, it's a completely different idea. And I looked at it, this time has been changed, what they call the 22nd century, what I call. It's a different strategy I'm doing. Mostly I'm looking for some international complex between economics and you never predicted future. I'm not a fortune teller, but sometimes it's a crashing without any warning. So wonder what happened. That's how I've been watched it instead of a pure ratio. The companies lower, buy low, and sell high. That's part of it, but I'm totally different. So I'm looking at it mostly. How does it move to the federal government? How much they gonna, produce all that making new money, or Chinese how much we had a debt from the China. What is every year? Why are we going up that high? So then Chinese, are you the Chinese?
I studied that market.
No, I'm asking. I don't want to, when I say something else, they got very furious. My knowledge, which I've been around, when you invest in China, you have to understand their culture too, not only just looking at the trend. That's me. I'm not talking to you guys.
Yeah, I think when we addressed that earlier when this gentleman here was talking about 10 cents.
No,
he addressed
no,
the
that's
risk
just
there.
forget it.
Yeah.
My opinion, I'm just talking to you. I do not actually, China and Russia, very beginning already, I mentioned before when the, whatever, the things come up. But China is still under communist. You have to understand that. So you have to understand their culture, how their businesses are running. So he was a little scared about it. I totally understand that. That's very unpredictable, really. So I am here. Yes, I have some couple, very attractive one, but at this time, I don't know. Why? Because we are in a little more problem because Europe supposed to be get better, but still they are struggling in Europe. So it took so long, even 10 years, still we really having some problem right now. But I told them, somebody asked me, what is your predictor? I am not a fortune teller, but the way I see it right now, it's just like a thin ice slice, and then people cannot see under the water. It's gonna be somebody stepping and you just crash and boom, you sunk in the water. That's coming. I'm afraid about it. So I always looking at the world's economy first.
Do you hedge your portfolio in a certain way for that? Do you buy puts or sell calls?
Yes, I have a lot, but I try not to give mine. But I give you some sort of idea. You have a Bitcoin, whatever, cryptos. Yes, I already know 2 years ago. That one's going to be crazy. Okay. But the thing is, you have to look at rather than that, it's me, okay? Please. Yes, it's the electric cars right now. They produce Tesla, whatever, they goes there. But the thing is, what happened, the metals, what you call the coal, yes, the batteries. Then where they're gonna get all the material, metals, where is the best. So I'll give you a shortcut. I give you a shortcut, but they're searching for some country international. I think a couple of places. One is in Korea, LC, which is they also have a tremendous quantity to support the metal to the export, but they're pretty expensive. So I'm looking at the cheapest one. I'll give you a kick. VALE.
Oh yeah, Vale.
That one
VALE?
Vail, I think that's.
Yeah,
Vail.
Vail. They
Latin
have
America.
the company has a
It's from Brazil.
really
Yeah,
yes.
Latin America.
They
Talk
got
about ballet, I think. It's
they have a
Maybe.
in other words the supplies. I'm talking about that trend. Instead, they have the Brazil have a really lot metals in that area geographically. So they are the one. If Tesla, wherever they succeed the electric car, then the three in the world they're gonna have a huge contract with them. That's my opinion. But since I'm looking at I put it in the price to buy in $8. I just missed the chance. I keep going up, and it doesn't give me any chance. But I think still, for the future, soon as the electric cars become succeed, probably that company will be chosen by the Tesla or any other company. That's what I'm looking for.
Okay. That's what we want to know. So what do you think?
Keep coming back. That's all we ask.
We always like to have leads. All right, Wei, you're next.
All right. So I'm just looking into 2018 now for companies like the CPU the processors, the graphics cards, and also the just overall computer industry, right? So I'm actually right now somewhat bearish in Nvidia. That's a NVDA, just because right now, at least I think a few weeks ago, right, AMD and Intel, they talked about partnering up to design their one custom semi-custom chip, which is essentially it's a Intel processor embedded on the same semiconductor with the GPU provided by AMD connected to a high bandwidth memory using one of the proprietary technology by Intel. And that technology essentially is a direct competition to NVIDIA, right? Because most of the Intel computers today, if they come directly with like what's it called, Intel HD graphics, whatever, but if they're capable of doing some graphics card integration with AMD and use right now at the lower end would be like Vega, for example, nothing's gonna stop them from advancing to higher performance GPU on these kind of computers as well. Because if that's the case, you buy a computer that has a decent GPU for gaming, then there's really isn't a reason to buy additional PCI device just to take out slots to use like NVIDIA graphics, right? So for that, I do see somewhat bearish in the PC market for NVIDIA, and more market share maybe go towards Intel and AMD in that perspective.
So when
And
you
then-
use a comparison with AMD and NVIDIA, you see AMD.
Yeah,
AMD is the
AMD's
red.
Yeah, AMD's been tanking just
Great
because
buying
of valuation, huh?
Great buying opportunity.
Yeah, I actually ended up. To tell you the truth, I have like 100 put options in it now.
In AMD.
Yeah.
AMD.
What strike?
Strike
What
of
price?
12.
What's
12?
it trading at now? AMD.
It was a $10.
It's like
something
10,
that.
10, 20 something, if I remember.
And you had it at 12. Okay.
Yeah, but
12.
I got the other end of the stick though. I short the put at 12 strike, so I'm basically in the money on the puts. Yeah, that's so for that one, I do see the market share going towards AMD and going towards Intel for the GPU, and then of course we also have the GPUs using for mining, right? So that's another thing where people talk about the cryptocurrency. Essentially, people will use and buy the GPUs for the mining purpose. But every single time the cryptocurrency goes up, it deters people. Actually, people start thinking, maybe this is the high. There's no reason. There's no good reason to buy more, essentially processors or GPUs to do the mining, just because you don't get the bang for your buck anymore. So the people who adopted early and bought the GPUs, bought the ASICs, bought the FPGAs or whatever processor to do the mining, those people have the infrastructure in place and they got the money paid off for the capital equipments, and they're just like getting the coins at this point and maybe even mining new coins. So for the NVIDIA right now, I do see somewhat decline, and I think they talked about this in both of the AMD's earnings announcements, in addition to like NVIDIA's earnings announcements. It's like they kind of downplay the role of crypto mining in their earnings, just because they anticipate a decline in that sales as well. So of course, then it goes towards the machine vision for NVIDIA. That's the things like image processing for automation cars, right? If you like Tesla, for example, they will of course take care of that. But what I see is that most of the learning happens on the higher end of the GPUs. So most of the people buy expensive GPUs to do the data processing and massaging and do the machine learning. And once you deploy the application, they can, I think just a few weeks ago, there's some articles talking about using the ASIC boards to deploy for deployment and use the GPUs for training. So if that's the case, then they will sell higher end for GPUs for processing and training. But then once they go to consumers, for end users, they will not be GPUs anymore. So that was another concern for the market going into 2018. Yes?
I'm looking at the brokerage and analyst recommendations from the video. And I have a buy by Argus, a buy by Canaccord, a buy by Citigroup, a buy by Ford, a buy by Jefferies, a buy by Jefferson, a buy by, and then so on. It's a Merrill Lynch, Needham, and so on.
Yeah.
Sometimes it's not a good idea to get too granular.
Yeah, I'm not saying that I'm shorting it. I'm saying I'm getting bearish on it.
You know, these analysts looking at the big picture, and they're looking at 6 months ahead and a year ahead.
I'm looking at the technology trend. I'm not looking at the company's fundamental at this point. If you look at the fundamentals, yeah, they look great. They're making money for hands over fists, right? Because
you buy a stock because you think it's going to go up.
Yeah, that's true. That's what I'm saying. I think the market is overvalued towards the AMD and Intel partnership.
There are a lot of stocks that are overvalued and just keep going up.
Yeah, and that's why I'm thinking that it actually makes more sense to purchase towards that end of the GPU market, which is Intel and AMD versus the NVIDIA. I'm not saying don't buy NVIDIA. I'm saying this side seems more favorable right now. That's all. And then also, of course, we have the 14 nanometers, I guess, dies that's being fabricated by the Intel group right now, and this might be a little bit more too much detail, but I also see that market being a little bit captured a little bit by Ryzen, especially if they move towards like 12 nanometer fabrication for their Ryzen Plus. And then yeah, that's it for me. So I'm long.
He has a question for you.
Okay, I'm long in AMD, I'm long in Intel, and I'm somewhat bearish in NVIDIA.
I have one question about these chip makers, especially graphic cards, and I might not be phrasing it correctly, but I keep hearing how much power these cards take. Are there any companies that are looking at reducing the power consumption more than the other? Like
Yep. Right now, AMD actually has the most bang for the buck in addition to having the cooler processor. I mean, yeah, compared to Intel. Yep. So lower temperature also means less power consumption.
Right. And AMD is doing the best.
Right now, they're doing better right now.
So one last question, Wade. For AMD, I like your thinking on AMD. So will that be a catalyst within the next 6 months that there will be some kind of answer that they're so heavy into Bitcoin and blah, 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 that will pump up the price of AMD, let's say, to your 12, 13 target? Do you see that happening in the next 6 months?
I don't see a $12, $13 price target. My price target for it is about $11.50 for AMD. Let's see, let me pull my Excel sheet up real quick.
That's easy.
Okay, so right now at the current level, I look at the $10.32 as the fair price for procuring AMD.
Okay.
And right now, AMD, I think it was below that. It was below 9. So I sold a bunch of puts in the money put because of that. So I was like averaging down since it dropped below like 12. So yeah.
Okay, thanks.
Great. So is that it? That's it for you then, Wayne?
Yep, that's it.
John, you're next.
Guys, I sat around the room. So you asked about, I like to hold companies, but I put stops because, Sam and I have one where the damn thing, I should have had it stop and it went down 50%. So I did get out of Square as it started coming down. I made some money on it,
Are you considering going back in, or was that just kind of a calculated thing on your end, just to make a nice?
Well, it was getting a lot of hype, and they kept coming up on the articles on them, and I guess they were also tied into that cryptocurrency to a little bit. I will say this, not to talk about cryptocurrencies, but I said this last week, if nobody was here, I missed it last week. If you go on to Chris Swada's podcast, he did a very, very good presentation on
I
blockchain.
tried to put that out there.
And he you know, we're talking a guy that's very conservative, Chris Swada. He's a very value-oriented guy. But he did a very good presentation on blockchain, which is the concept of currency, not getting into specific. He mentioned
I did send it out
Bitcoin.
there, but I mean, it's
so that
20
people can
starts 20
watch it,
minutes.
so they can listen to it.
Right.
And I did reach out to him today and asked him, would he please come to the library
Okay.
and maybe do a presentation.
Okay.
So it was it was the last week one there where he says
Yeah, the ninth one.
was the 9th. So
Yeah, right there.
if you want to go to that, you don't want to hear anything about the various currencies, but the concept of what this is, what blockchain is, and I do think I can see us moving that way as a society. Just the pure concept of like aid we give to countries, that's the way we'll move the money there. And I'm in the budget area. I can see grants and things we do. That makes sense. And it's quick, and we don't have to wait around for exchange rates to take place. It's not. It just takes that whole concept out of the process. But anyway,
Is his position long in cryptocurrency?
no. He's not invested in it.
Okay.
What he did was he explained the concept of blockchain. Now, don't say cryptocurrency. Blockchain.
Right.
And how he feels blockchain is the way everyday society eventually will be making purchases. That's it.
Okay, I think Hector wanted to take a.
No, it's my turn to go around.
Yeah, that's.
Yeah, for the young lady, this is the kind of advice that we give at this club. Now, last week, I made a recommendation, and I hope everybody jumped on this recommendation. Unfortunately, it has to do with Bitcoin, but just, and I said, this particular stock, I sold some puts against this particular stock. On Saturday, a week ago, I made this recommendation here at this forum. And look what happened. On Monday, it was at 53, that went down, and then it ended up at 68. So last Saturday, it was in the 40s. Today it's in the 68. So you could have made 50% of your money in 1 week just by coming to this club. But did I do that? I wasn't going to take that risk. However, my position was that are you familiar with selling puts? So it's a strategy to sell premium on a put, and then if it comes down, then you own the stock. I sold them at 40, a bunch of them. And it was getting me a little nervous because I bought them back in here when the price was about 50 or so. Then it came down near 40, and I was starting to shake in my boots. But then I said, what happened was, and this is a thesis that I went on, that there was a breach on the Bitcoin security of some sort. There was some big news. Bitcoin went down 18% in 1 day. Overstock is invested in Bitcoin. It does business to it. It has overstock materials that people get at a big discount, right? Unlike Amazon gets a discount. And so they accepted Bitcoin. So means of doing it. So they were tied, and people were shorting. Kind of the narrative is that people who hold Bitcoin would short overstock as a mitigation against that. My thesis was that because the futures business now includes Bitcoin, a couple of exchanges have started doing Bitcoin futures. What does that mean? Well, now you can hedge your Bitcoin position via the futures instead of shorting the stock. So people started, to my mind, there was a short squeeze on this one. Obviously, people who were shorting this had to get out as the prices of overstock went up. Because the thesis that, okay, I'm going to short overstock because I may not do well in Bitcoin. That was out the window with the futures. But now this is an unusual circumstance where it went up and But that's the kind of advice we give it.
So you make money on the puts?
By the puts that I had, so I sold, sold the puts at 40, so I collected all that premium that were expired on the 15th of Friday. But the way to make real money would have seen, if you had seen this, would have been buy a call at about, let's say 50, which would have been, or 60 out of the money call a week ago. Would have been 10 cents at the time. Today would have been $1, so you made 10 times your money on calls, right?
So I read on Friday that their CEO of Overstock said that they might go private by next year.
Okay, so that's another guy. He might do some Bitcoin.
He's trying to make some kind of, I guess they call them ICOs or something, initial
coin offering.
He's trying to do his
He will
own.
get fully invested in the,
Yeah.
or take on some activity in Bitcoin per se.
Yeah.
By the way, if somebody really wants to know, there was called the Bitcoin White Paper, which is the master. It was written back in 2009, and that explained, that is the guts of Bitcoin. And
So that's probably more the thesis than what I was telling you about people with the futures and using futures as the hedging instead of overstock. A couple of things that were related to it. Another thing that came up last week was this guy Jeff Gundlach, Gundlach. He's a fund manager, very well known. He says you should invest in this INDA and hold it for the long term. This is India, and he believes that India will follow the path of China in growth over the next. Don't worry if it goes down 5-8% in one day. Just keep it. Don't sell it, because he sees this going nothing but up in the next decade or so.
If you follow the demographics, it seems to be the trend because they have a lot of young people there, and any product you introduce essentially in the developing market, if they consume it, you immediately get that money. So yeah, actually, I remember Gobi was here. He was talking about some companies like I forget, was it one of the telephone or cellular provider company? It's like you can easily get a monopoly market there at the current stage.
There's kind of a safer play for you. The old Coca-Cola plays came up as a recommendation. Safe play. It's there is an uptrend on that one. It's a healthy 3.2 dividend. SDZ is another one that came up in the conversation. My good friend who follows the Nigerian brothers. This stock is amazing. It's nothing but up. This thing just is kind of an escalator for forever. SDZ, it doesn't seem to ever go down.
You know, another one is DEO, which is a competitor of them, I think.
Okay, is that it for Andrew?
Let's see.
I'm sorry, did you say SDZ?
ST.
Constellation
Thomas,
Brands.
okay, thank you.
Constellation Brands, yeah. Let's make sure I got everything there.
Yeah. Well, I
I think that'll be it for now. Yeah.
Yeah, do you
I want to get Bo and make sure we get an update.
Oh yeah, we got 20
Bo,
minutes.
you know, Yeah, go ahead, Bo. You want to? That's your. Frankly, selfishly, I want to hear your health situation, and then you can share your insights.
Well, statistically, on a survivable bell curve, on 2 standard deviations to the right of the mean, which means that I've outlived most people with my diagnosis. Since my expiration date on is a sliding scale, I don't know where it is. I just know that my time decay curve is getting steeper. In other words, I've done very well for the last 4 years, but it's starting to get worse more rapidly. But I have remission from time to time, and today is a good day.
We're glad it came today.
So I got out. My wife encourages me to get out whenever I can, to get out from under her feet. When I'm at home, she knows where to find me, She just follows the oxygen hose from the generator to where I am. So I've been confined to the quarters for 5 weeks. Today is only the second day that I've been out of the house in that time.
Glad to have you back.
Thank you. Okay, so in terms of what I've done, of course, I always do my futures and futures options, which is consistently done well for me over the decades. But I also thought about what's happened over the last couple of years, actually the last several years. We've been in a secular bull market, and most people here are still bearish. And just about the time everybody throws in the towel, the secular bull market will be over. But that's still 6 or 8 years away. So I decided that I should look at the next 6 months, which are traditionally a strong period in the stock market, not always, and try to do some equity options, which I ordinarily don't fool with because the thinking is so totally different from futures options. So it's sort of, I can never quite get my focus drilled down enough to be a success with it. But I made up a list similar to what Vince did, and what I did was I took the Dow 30 and sorted them by price performance 1 year, took the top 10, then I did the NASDAQ 100, same thing, top 10, and then the S&P 100, took the top 10. Gave me a list of 30 stocks, which I then put in a watch list and sorted them by percent growth the past year. And not surprisingly, 8 of the top 10 came from the NASDAQ 100, and the bottom 8 came from the S&P 100. So tech has been what's been doing well for the past year. Then I looked at the 6-month performance, and the order was completely different. And now I need to look at 1 month, 1 week. And then we'll do a weighted average with 6 months being the key, because I'm looking at a 6-month time span for my options. In other words, I'll be doing call spreads 5 to 8% out of the money for either April, May, or June. And the reason for that is that some stocks are in the January cycle, which means that April options are available, February cycle of the Mays, and the March cycle of the Junes. So I can't run Aprils on everybody because not everybody has Aprils. Can't run Mays for the same reason. So I have to stagger them out over those 3. And of course, not every stock will have an option spread that fits in that range that is also priced right. So I don't know until Monday when I go through and do the pricing how many of these 30 will actually result in a trade. And then of course I'll check on them each Monday and see, whatever changes.
So these are debit spreads?
No, these are going to be credit.
Okay.
Yeah, I'm sorry, debit spreads, you're right. And my entry level will be on a 5-point spread between 1 and 1.5, on a 10-point spread between 2 and 3, and larger spread proportionally, with an exit level somewhere above 5. And time doesn't matter. If it gets 5 in a week, Or you get out and you look and see if you want to set a new spread at a higher strike, because what you're looking at is the time performance, and you have to figure that out of the monies have a different time curve from at the monies. The further out of the money you go, the further to the left your optimum performance is shifted. So by staying tight 5 to 8, I'm fairly close to the right-hand scale. So these shouldn't actually be profitable until March or April, but they may do sooner.
Sure.
I'll take them off when they are.
Time decay is not as fast, obviously.
So, of course, the time decay is rectified by the fact that you're doing a spread, so in the same calendar month, so that your time decay in what you sell is pretty close to your time decay in what you're purchasing. Your deltas are different, which is what you're looking to make your money on. Your delta is higher on the one that you're long. So that provided that the stock goes higher, then that'll work. Now, I may help to finance them by selling bull put spreads, but that will depend on the pricing as well. That'd be much shorter time frame.
That's what lawyers do it these days.
So you're capping your upside gain, but then exposing yourself to downside by selling the puts. You do it that way.
Well, but because I'll be selling a bull put spread,
Yeah.
I'll be limiting the downside. But you're right, it will add risk to the thing,
Yeah.
but it will also dramatically lower the amount of capital committed to the strategy.
Yeah.
And what I'm planning on doing is I have one account that has only one stock in it, and that's strictly for nostalgic reasons. My grandmother bought that stock sometime in the 1940s. My mother inherited, then my father, and then me. And so I just keep that stock. You're asking about time frame. That's my time frame. It's a lifetime. I
What is
also
it? What is the stock?
a Duke Energy. It's gone through several evolutions. It's not exactly the same company that it was, but it's the same holding that's never been sold over those years.
Bo, can I ask you a question?
Yeah.
Question there too. I think the gentleman here had a question.
I have a question. He's talking about spread of option. Is it the same stock you buy different expiration dates?
Yeah,
And that's
no,
called
that's the
spread?
same expiration date, it's different strike prices. Like a stock that's $50, you might buy a 60 call and sell a 70 call. Or you might have to do the 55, 65 strikes if they're available. You have to look and price everything and see what makes sense in terms of what your anticipated move for the stock is.
Only
at that
call
time.
if you buy same stock with different expirations.
Oh, well, that's a calendar spread. The math is different, the psychology is different. All the calculations are different.
So is there a chance to make any
Oh,
money on that?
any strategy has a chance to make money. It also has a chance to lose money. And what you try to balance is how much you think you can make versus how much you're willing to risk, and different strategies apply to different stocks.
Is it possible you can give a list of candidates to Gary? Is that okay?
Oh, well, I haven't finished refining it.
Oh, you refined it. Yeah.
But I can do that
Share
once
that
it's up.
with us,
But I hesitate to do that for the simple reason that it's just my methodology for selecting stocks that for the past year, and interestingly enough, most of these charts go back to February of 2016 when this bull run really began. It got a significant boost from Trump's election for whatever reason. I have no clue what people think, but this evidence is in the market that they think that it's good.
Bo?
Yes.
Yeah, I got a question on options or puts and calls, but this bill they're gonna pass,
Tax bill?
the tax bill, whatever you wanna call it. My concern about it, we talked about it here, is it's gonna release inflation. And I just remember Greenspan and everybody behind him were scared to death of inflation. Once inflation happens, there's nothing they can do. They can't put it back in a box. You remember the 70s, 17 to 28% on homes and cars. And I was just wondering, does this concern you, or you think, hey, this is happy days in the roaring 20s?
And someday we will get a significant pullback, 20% or more. I can't tell you whether that'll be tomorrow, 6 months, 6 years. It'll happen.
But
and I could drive myself nuts with what little bit of life I've got worrying about it. Or I can say, okay, when it happens, I'll recognize it. And the risk is limited in these option plays, and I can survive it. Because this is a very small account that I'm doing this in, and the reason that I'm doing it in that account is there's not much else I can do in it. And call spreads are about as cheap a thing as you can do as far as committing capital to an idea.
By the way, Bo, on this, we were talking about FIFO. You know Larry Kudlow?
I'm sorry?
We were talking about the FIFO first in, first out last week.
They got rid of it.
They did get rid of it?
Oh, they did get rid of it?
Officially, right?
I thought they got rid of it.
Because Larry Kudlow on Friday, I haven't read the full body of the act, but he said from 4 very senior House Representative people that FIFO would be out. I don't know if it's become fully out officially or not.
Yeah, it says it's cut from the tax reform. So
It's never been mandatory.
But that would be great if they get rid of the FIFO.
Yeah, because that would create havoc for people.
Yeah, it definitely would have
Especially
some major
retirees.
problems.
Yeah.
I mean, it hits the middle class.
Oh, yeah.
It's never been mandatory. It's just what people most often elect.
Right. But I mean, Congress doesn't seem to care about middle income folks. I mean, let's be
And, I
honest.
mean, they also got rid
The
of
tax bill is a non-issue as far as the economy is concerned. It's based on the myth that it will stimulate the economy. And all you have to do is look at the history of tax bills to see what a big myth it is. It's just like deficit spending is supposed to stimulate the economy. And you can look at history and see what a myth that is. The economy moves by many, many different things, and those two things are not as nearly as significant as politicians like to make them out to be, because that's the way they buy votes, and anything that buys votes is what they're going to tout.
Yeah, money doesn't solve the problem. Right.
Yeah,
So
it helps.
I mean,
it helps, but if the problem is that you only
But
accelerate.
John's point is very important, John, because the deficit increases. It'll
Well, I
crowd out.
I mean, we talked about this, Bo, you weren't here, but I asked them what they thought about the bill proposed, and the sense was it would create inflation, and I just know, hearing that inflation can be the kiss of death.
Something will trigger inflation.
And that's what all those chairmen have been trying to do, I mean, since the 70s, to keep it down, doing every damn thing they know how.
Well, they certainly have done a bang-up job the last decade of keeping inflation down, even when they were trying to build it up. That's because they don't understand the relationship of what they do to inflation. They thought that by keeping money cheap, it would stimulate growth. but they weren't looking at industrial capacity, which is still in the low to mid 70s, which means, the industrial utilization, capacity utilization. As long as it's below 80, companies are not investing in new plant. There's no reason to. They've got excess capacity already. So the money simply got cycled back as deposits with the Federal Reserve. So what it was one benefit, banks now have 12 to 14% reserves when they're only required to have 10, which gives us a hell of a cushion against an economic shock. So that part of it's wonderful. But the fact that they don't seem to understand that that's what's happened. And you read the minutes and you just, every time I read them, I say, would somebody please teach these people some economics?
Well, we don't want to get you too upset there, Bo. So
Well, thanks for sharing.
Yeah, but if you just look at the macro data, right, they have this like consumer price index in addition to the producer price index. Like if you look at the producer price index, it's actually increased by 3.3% year over year versus the consumer price index, which is less than that. So that means who's footing the bill right now? The producers, right? So at some point that has to transition to the consumers, which I think is going to happen.
They finally got it up. They've been trying to get it up to 2% for a decade almost, 8 years, and they finally managed to come up. But it doesn't have anything to do with what they did. But anyhow.
So can I have ask you a bottom line, because do you think the benefit of this new tax code, would that generate more deficit of the 20 trillion, or it's going to generate more,
More deficit.
Deficit for sure. About 1.5 trillion, that's the cap. At least under the lawmakers, they wanted to make it
Budget
below
Office.
But we'll take care of that by cutting Medicaid and cutting Social Security. It'll be just fine.
I think the problem is that it's not clear to you that the Federal Reserve can only address monetary policy. And what's been wrong is that we've had all the fiscal policy done wrong, and we have had all these crummy regulations put on us in the last 8 years by the idiot who used to be in the White House. And if we got rid of those things, I think our economy would have gone forward a lot faster than what it did. And the Federal Reserve couldn't do anything about the idiot.
Well, the advantage of the slow growth is that it lasted longer. You have rapid growth that quickly runs through, and then you have your next recession.
Well, you want medium growth is what you want.
Yeah.
Okay. But you don't want the slow growth and you don't want the fast growth.
Yeah.
How do you really feel?
Yeah, and then they also got rid of the net neutrality, so that's good for your AT&T, right? So you're happy with that?
I guess it's the comment over here, but we want to get back to
Mixed bittersweet.
No? Oh, did you cap your upside? Is that what happened?
Anybody else didn't get the chance to talk yet?
I just heard from the C-SPAN, but I cannot quantify it. Are you going to give more positive cash flow from the economy, or are you going to increase more deficit of the 20 trillion?
You increase the deficit.
To pay back
Well, the
to the
deficit always
Chinese
increases.
government.
Yeah, unless you cut back spending, it's always going to go up.
You know the thing though about the deficit and other countries owing each other.
Yeah.
There's a book called The Economic Hitman. If you read it, I mean, Russia owes us a hell of a lot of money, and we've never asked for it since World War II. And we've bailed out Latin America. I remember in the Clinton administration, they did a huge bailout of Mexico. So I think there's an agreement with all these countries. They never call in their debt. They never call it in, because if those countries start calling in issues, the money wouldn't be there.
And those are our markets.
Like the other thing, like this Iranian, the big thing that giving that $100 million to the Iranians.
Gotcha.
Can you put me off?
Can you take
the deal on that?
That was their money.
The deal.
And this concludes this week's live stream. Thank you for listening.